For more than 70 years, the US dollar has dominated international trade and finance, holding an unchallenged position as the world's main reserve currency. Due to its supremacy, the United States is able to significantly affect the global economy, having an impact on everything from trade agreements to foreign countries' economic policies. However, why does the dollar have such a strong hold? There are many different factors at play, including past occurrences, current economic policies, and the fundamental advantages of the US economy. This video examines the main causes of the dollar's dominance in international trade and explains why it is still the preferred currency for the majority of cross-border transactions. Historical basis of the dominance of the dollar. The post-World War II era is responsible for the dollar's ascent to prominence on the international stage. The British pound sterling held the top spot as the world's currency prior to the conflict. Nonetheless, the war's economic destruction left the United States as the world's greatest economic power, leaving Britain and other European nations financially weaker. The Bretton Woods Conference of 1944 cemented the dollar's standing by creating a new international financial system in which other currencies were linked to the dollar and the dollar was pegged to gold. The USD became the central bank of the world economy as a result of this structure. The dollar's significance did not decrease with the fall of the Bretton Woods system in 1971 when President Nixon removed the dollar's gold convertibility. Rather, the dollar became part of a fiat currency system, the value of which depended on confidence in the competence of the U.S. government to provide economic stability. The size and strength of the U.S. economy had a major role in maintaining the dollar's firmly established position in international trade and finance, notwithstanding the change. The American economy's role. The dollar's hegemony is largely due to the size and power of the American economy. With a gross domestic product greater than any other country, the U.S. has the biggest economy in the world. The dollar's value is supported by its economic strength, which makes it a trustworthy means of trade and store of wealth. In addition, the United States is home to the biggest and most liquid financial markets in the world, such as the NASDAQ and the New York Stock Exchange, which draw investors from all over the world and support the dollar's position as the go-to currency for cross-border transactions. Because of the robustness of the American economy, there is a global market for American goods and services, which strengthens the dollar's position in international commerce. Dollars are frequently needed by other nations that trade with the United States to complete transactions, which sustains demand for the currency. Furthermore, the dollar is now favored above other currencies for maintaining reserves due to the U.S. government's capacity to maintain stable interest rates and low inflation. The dollar serves as the currency of global reserve. Being the world's main reserve currency is one of the main reasons the dollar dominates international trade. Large reserves of U.S. dollars are kept on hand by central banks worldwide to support their respective national currencies and economies. The International Monetary Fund, IMF, estimates that U.S. dollars account for almost 60% of all foreign exchange reserves worldwide. Because of the dollar's reserve currency position, other international organizations are more inclined to hold and trade in dollars as long as central banks do. This creates a self-reinforcing cycle. The capacity to borrow money at cheaper interest rates is another special benefit that comes with the dollar's reserve status for the U.S. government. The United States is able to fund its debt more affordably than other nations because there is a constant demand for dollar-denominated U.S. Treasury securities. The U.S. is able to run higher deficits and pursue more aggressive fiscal policies thanks to this exorbitant privilege, as it has been dubbed, further strengthening the dollar's dominance. The petrodollar system is another foundational element of the dollar's hegemony in international trade. The majority of the international oil trade has been performed in U.S. dollars since the 1970s. This agreement was codified as a result of agreements the United States made to price oil in dollars in exchange for military protection and other advantages with key oil-producing countries, including Saudi Arabia. Because oil is a vital worldwide commodity, demand for dollars is sustained because countries all over the world must have dollars in order to buy oil. The petrodollar system also makes oil-producing nations stakeholders in the dollar's sustained dominance by linking their economic fortunes to it. This mutually beneficial connection lessens the incentive for these nations to convert their oil transactions to other currencies and upholds the dollar's dominant position in international trade. Furthermore, the U.S. has additional power since changes in the value of the dollar immediately affect the global economy because oil prices are stated in dollars. Stability and trust in U.S. institutions. The confidence that international markets have in U.S. institutions is a major contributor to the dollar's dominance. Particularly when contrasted with financial institutions abroad, the U.S. government, the Federal Reserve, and other financial organizations are seen as comparatively stable and trustworthy. For the dollar to continue to be considered a safe haven currency, this trust is necessary. Investors rush to the dollar during periods of uncertainty or crisis in the global economy, increasing its value and solidifying its position as the most favored currency in the world. The U.S. transparency, rule of law, and property rights protection all contribute to the strengthening of investor trust in the dollar. Due to their confidence that their assets will be safeguarded by a just and secure legal system, international governments and investors are more inclined to hold assets denominated in dollars. Because other nations find it impossible to emulate this trust, the dollar will continue to be the preferred global currency. The place of the dollar in international trade and debt agreements. The dollar is the preferred currency for international debt issuance and trade agreements, demonstrating its dominance beyond reserve holdings. Even if they are not headquartered in the United States, many nations and businesses issue debt in dollars. This is so because there is less chance of currency swings because the dollar is thought to be more stable than other currencies. The dollar is widely used in international debt markets, which upholds its status as the world's reserve currency and guarantees that demand for dollars will always exist. Similarly, even in cases when the United States is not a party to the trade, international trade agreements frequently entail dollar-based transactions. This is so that currency conversion is less complicated and expensive because the dollar is widely accepted. For instance, to avoid the volatility of the yen and the real, a trade agreement between Brazil and Japan might be settled in dollars. The dollar's influence in international trade and finance is further cemented by this practice. Concerns regarding the long-term viability of the dollar are also raised by the enormous national debt and continuous budget deficits of the United States. The preferred currency for international trade and reserves may move away from the dollar if confidence in the U.S. economy were to decline on a worldwide scale. It seems unlikely that these difficulties will overthrow the dollar in the near future, though, since no other currency presently provides the same level of stability, liquidity, and acceptance throughout the world. The American military's and geopolitical powers' role. The enormous global reach and geopolitical power of the U.S. military are major factors that contribute to the dollar's dominance. The U.S. is well represented in important critical areas and keeps military installations all around the world. This military might support the dollar-friendly international economic system in addition to defending American interests. For security considerations, many nations, especially those in uncertain political environments, side with the United States. In the process, they also make the dollar their main medium of exchange for transnational transactions and reserve holdings. Because of its geopolitical clout, the dollar will always play a crucial role in the world financial system. Furthermore, sanctions, which are usually implemented in dollars and other economic instruments, are frequently used in U.S. foreign policy. As a result, in order to avoid penalties or to continue being a part of the global economy, nations and multinational companies are forced to transact in dollars. The combination of the United States' economic might, diplomatic clout, and military might fortifies the foundation that upholds the dollar's hegemony in international affairs. And that wraps up our exploration of why the US dollar dominates global trade. If you found this deep dive into the mechanics of international finance and currency influence insightful, make sure to give us a thumbs up and subscribe for more content on global economics and beyond. Have any questions or opinions on the dollar's role in the global market? Share them in the comments below. I'd love to hear your thoughts. Until next time, stay curious and keep exploring the forces shaping our world.